Hi, this is Carib Carter Clues, and welcome once again to Mike Cobb's Offshore Investment Report. Very, very important topic to cover today. The topic of where you need to invest your money offshore and why. And here to delve into it with us is the offshore oracle himself, Mike Cobb. Mike, welcome.
Hey, good to be with you, Carter. Always fun to hang out. And what's that say? What's your coffee cup say?
My coffee cup says, "Let's do this thing."
Let's do this thing. All right.
It's the
Let's
motto.
do this thing.
It's the motto
Yeah.
of Coffee with Carib Carter. Let's do this thing.
Nice.
And we really got to do some things today because I got to be honest with you. I just watched a great interview with Victor David Hansen. I know you know who he is. He's a brilliant analyst. And, you know, by the time I got halfway through it, I realized one of the great services that we provide to offshore club members, 100,000 strong now, is helping them understand not only that they need to move offshore, which, folks, you really, really do, but they need to get their money offshore, to invest offshore. Mike, I'm going to say something, and you can say agree, disagree. If somebody said to me right now, Carter, you have some money to invest in property, where are you going to invest? The first thing I'd say is not in the United States of America. And the second is I would invest offshore, and there actually would be a third, and I'd ask Mike Cobb where the best place to make that investment is, because nobody has made better offshore investments than you have. What do you think?
Well, thank you, Carter. I appreciate the kind words. You know, I agree with you, but maybe not for all the exact same reasons. I do think that investing offshore is really, really important. And, you know, I think most people have a vast majority, if not all, of their investments in the United States. And sometimes I think people think, oh, I've got BMW, I've got Nestle, I've got Toyota, right? But you own all of those through the New York Stock Exchange, is my guess. So you're still invested in the U.S. Yeah, it's a Japanese company, a Swiss company, and a German company, but at the end of the day, you know, it's still all U.S. based. And that you know, that piece of it, right? The international diversification is so important. Every kind of diversification is important in investment outcome. You know, in modern portfolio theory, they really looked at it and they studied it. Diversification is the single most important factor for a successful portfolio.
Sure.
And if you're not internationally diversified, and I mean truly internationally, you actually, if you said, hey, I like BMW stock, well, then buy it on the DAX in Frankfurt. So you're buying it in euros. Right. Yeah. I mean, now you're internationally diversified, right? Or Swiss francs if you're doing Nestle or whatever. Right. But, you know, I think the physical hard assets make a lot of sense. Obviously, I'm a big metals guy. I'm a big fan of precious metals. I'm a fan of crypto. I think crypto is another hard asset. I mean, it's very volatile right now, but goodness gracious, it's only 10 years old. It's a baby in the general scheme of things. But yes, Carter, offshore investments, property, real estate, overseas. Man, I mean, everybody should have some of that in their portfolio, without a doubt. Every single person.
It's just vital. Mike, let me tell you something. If a neighbor of mine, the other day we were talking about, and we have been talking a long time about investing in multifamily units.
Yep.
And I had to bring him in and say, I will never put one penny into a multifamily unit in this country. I think we need to look offshore. We need to look with Mike Cobb, Grand Pacifica, Grand Bayman, your other developments. And I'm going to tell you why. I don't know investments, but the one thing I do know, in addition to marketing, is politics. And one thing I've learned in almost 50 years working at the highest levels in Washington is in politics, what those monsters do, there's a ratchet effect. It only goes in one direction. So if you buy property in the United States that you think is going to provide you rental income for years to come, never forget during the COVID hoax, the CDC, what the hell? The CDC was allowed to tell you you're not allowed to collect rent on the property. A lot of old folks went bankrupt over that. Then the Supreme Court ruled that's not legal. But
Too late.
number one, Biden said, we're going to do it anyway. And number two, the Supreme Court said, but if Congress passes a law, then yeah, it will be legal. So folks, what that tells you, it's the ratchet effect. That is just the beginning. From now on, if you own a property, a rental property in America, at any moment, the government can say, you're no longer allowed to collect rent, which they did.
And Carter, it's amazing because, you know, that's not really confiscation. I mean, everyone's like, oh, if I own a property overseas, I'm worried about it getting confiscated. You know what? Buy it right. Make sure it has title. I mean, there are millions of U.S. and Canadian property owners throughout Latin America who have perfect title, no problems. You know, there have been hundreds, maybe thousands of people, okay, you know, that have had a bad experience, right? And those are the ones that get picked up on all the news shows and the media and stuff like that. But no one ever talks about the millions of people who own real estate with zero issues, right? Confiscation. I mean, you just described confiscation, except you described it as the banks confiscating, right? The tenant did not have to pay anymore, right? They were exempted, but you, the property owner, you were not exempted from your mortgage, right? No. I mean, no. Right. So now all of a sudden you can't afford to pay the mortgage if you have it leveraged, right? And the bank gets it. So I mean, this is confiscation by the banks enforced by the U.S. government.
By the government.
By the government. The government lets the banks take your property. No, it's insane, Carter. It's insane.
Mike, I want you to just, folks, process it. The Centers for Disease Control decreed a year and a half ago that you cannot collect rent on your property. What the hell? The Center for Disease Control.
Yeah.
You know, what are they? Who? Okay, so, but if you invest in a Mike Cobb property, let's get down to the nitty gritty here. Let's say you invest in a Grand Pacifica property, okay? And let's talk about some of the investment opportunities there. Yeah. And it's not just that you're going to get a gorgeous property. And it may be one you want to live in. It may be one you want as a second home, vacation, or it may be one that you want to rent. And we want to get to that too, Mike. But it also is one that's going to appreciate. And in this country, as you get more, Mike, let me tell you something parenthetically. In York, Pennsylvania, the politicians threw out York air conditioning. It took a whole city block. They did such a poor job of talking to the people of York air conditioning in York, Pennsylvania, that finally York threw up its hands and left York air conditioning, and the politicians turned the entire building city block into Section 8 housing. So that's what you're facing in the United States, folks. There, Mike, let me ask you, is there any danger of Grand Pacifica being turned into Section 8 low-income housing?
No, you know, but let's be very realistic. There is no investment that is without risk, right?
Of course.
None. No investment without risk. That's the nature of investment. If you don't want any risk, take your dollars and, you know, turn them into cash and bury them in your backyard somewhere. Your inflation will eat it away. But there's no, I mean, I guess there's risk. Somebody can come find it and dig it up. But you know what I'm saying? Like every investment has risk. So of course there's risk, but they're not going to turn it into Section 8 housing. And you know, again, this idea of confiscation and stuff like that. I mean, I'll take my chances. I'll take my chances in Belize or Panama or you know, other countries around there that they're not going to come and confiscate my properties. So yeah.
No, look, I own my first home I bought in Honduras was 12 years ago. Nobody confiscated that. I own 2 other homes there now. There's no danger of See, the government doesn't want my home. No. Okay. That's not a burden they want to take over. Right. And so
they want you living there, spending money at the grocery store, right? Buying stuff for your beautiful bride, you know, going on vacation and doing fun things and spending money in the local economy. That's what they want.
That's what they want. And let's talk about let's get specific. Let's say somebody, folks, I'm going to tell you, if you have money to invest in, let's say you've decided I want to do, there's a stock market, and I happen to think the stock market is going to continue to build for another year or so, because the government's going to keep pouring money in. The Fed is printing 120 billion a month, so they're going to keep pouring it in there. That's peanuts. And you can go to guys like Shaw Galani at Money Map Press. You can go to Romulus at the Offshore Club. You can go to Tim Melvin over at Better Way to Wealth, and you're going to probably, and you have a good shot at making 15-20% return on the stock market. That's just where we are today.
Yeah,
not going to last, but as long as the government props it up, which I think they're going to continue to do. But there are a lot of very savvy folks out there saying, I prefer to invest in real estate, okay? Tangible, with the growth market. Let's talk about buying a piece of property as an investment at Grand Pacifica. And again, folks, let's do the disclaimer. There are no guarantees. You know, government wants us to say that, so we'll say it as if everybody's an idiot and doesn't know that. There are no guarantees. On the other hand, if I invest in a home, let's say a $200,000 home in Grand Pacifica, what's the history of equity growth?
It's strong. I mean, you know, and look, it depends on the country, of course, too, right?
Yeah.
Nicaragua is a very unpopular country, and so you know, it's had its, you know, spurts of growth, and then it's had its, you know, times of leveling off. But you know, over any kind of 5 to 7 year period, you've seen really great growth in Belize. Actually, believe it or not, Belize right now is my favorite investment spot in the region for this reason. You know, it's at a cusp. It's become mainstream. The cruise ships have been coming there for, you know, 13, 15 years. Mainstream travelers have come, but there's not a whole lot of what I would call mainstream product. You know, the whole tourism industry of Belize was really based around niche tourism. Whether if you were into the Mayan ruins, you went to the mainland. If you dove, if you were a serious diver or serious fly fisherman, you came out to the Keys, right? And so a lot of these hotels were set up for this demographic of people. You know, it's just in the last 2 years that we've seen a Curio by Hilton and an Autograph by Marriott open up. You know, we have a Best Western franchise, and we're in the process of developing a Marriott Resort and Residences. So, you know, I mean, Belize is changing from this niche market to a mainstream market. And over the next 5, 7, 10 years, my guess is 10 years from now, there will be another 10, 12, 15 branded hotels in the country of Belize. And when that happens, like everything that's already there just grows in value. So I actually see the most rapid appreciation of assets in the next 5, 7, 10 years actually in Belize, Carter, more than any other country in the region. Very good. So I think with the new Marriott groundbreaking you did just a couple of weeks ago, there $350,000 a person can invest in, buy a home, right? Or suite. Buy a Marriott residence for about just under $350,000. That's correct. Just under $350,000. Oceanfront residence in a Marriott resort property. Yep. All right, and we're talking investment here. So there are two ways to get a return on investment. There is both cash flow, equity, and then a rental, income, the cash flow. So talk to us about that. And now, again, folks, we know the damn government disclaimer. That doesn't mean it's really, but let's talk as you know, as if you were talking to Carter Clues, you would say, "Hey, man, you know, if I were you and you got 350,000, Carter, I am talking to you, but I actually have another thing. I mean, I am actually forbidden by the Marriott organization to talk about return on investment in those properties. Right. So all I can tell you is that you're going to own a beautiful residence in a Marriott resort on Ambergris Caye that will be spectacular. But let's quickly now move to the other property we have, which is the Best Western product. Okay, good. And the Best Western product, you know, you can be into one of those studio condominiums for about 125, that little less than 125, but closing costs, whatever, $125,000. And those actually, I am allowed to talk about rental returns. We have three kinds of there's progress, right? You have the initial year, first year, you have 5-year stabilization, which is product stabilization. And then you have 10-year stabilization, which is market stabilization. So, I mean, best on performers, again, we're making guesses about the future, right? The future, who knows what the future is, right?
Right.
But right out of the gates, ROIs start in the, whatever, 6-7 range. 5-year stabilization, they're into double digits. And at 10-year stabilization, they're very, very, very nice in the, mid-teens. And so, again, you're not, it's not a home run, all right? I like to call it a single or a double, right? But by the way, lots of people swing for the fences and strike out. My philosophy, our philosophy as an organization is, let's just do singles and doubles, baby. Just singles and doubles, and owning a Best Western studio will definitely be a single or a double. It'll put you on base and it'll cash flow forever. I mean, you're going to own a beautiful studio condominium in a Best Western resort hotel 3 blocks off the water. I mean, and so far, it's the only branded product off the water that's a value proposition for that, that mainstream, that mainstream traveler who's looking for affordability. They want the affordable branded option. I actually think the Best Western, if you, and you haven't asked me, but I'm going to ask a question you haven't asked. What's the absolute best investment that we as a company have right now? Best Western studio or Best Western residences. It could be a 1-bedroom or even a 2-bedroom, but the Best Western residences by far, bar none, just because of the market placement, serving that mainstream consumer looking for a branded solution, but the ones looking for value. Everything else that's either built or planned is on the water. And we're talking about room rental rates of, $300-400 and up. Whereas at the Best Western, we're talking about room rental rates of $150 a night, right? So it's a big difference. It captures that value traveler who's looking for a branded experience.
All right. So let me make clear. We're talking about 2 returns on investment here. One is the equity growth.
Yep.
And the average, they tell us the average return on investment on Wall Street now, random walk is 10%. That's a lie. It's closer to 5, 6, maybe 7%. And do you think if an investment in the Best Western would have that much of a return, equity return?
It's hard to say. Here's what I do. I mean, equity and appreciation is a very, very tough thing to predict, right? There's so many factors, right, that go into it. But here's what I absolutely know for a fact, that everything you build, right, requires materials. And materials are subject to inflation. So what cost $125,000 to build today, if, the rule of 72 says, 7% will double in 10 years, right? So 10 years from now, it would cost $250 to build that exact same condo if we continue with 7% inflation, right?
Sure.
So if you buy one today and in 10 years, it costs $250 to build a new one, right? And you've got one that you've got track record and cash flow, right? Well, guess what? I'm going to say that probably you can sell it for $250. And in the meantime, you're picking up all the cash flow. But here's the really cool thing. As inflation goes up, our nightly rate, let's just say our nightly rate doubles, because not in real money, but in fake money, it doubles because inflation's pushing it up. So think about this. In 10 years, it'll be $300 a night, but you have protected your cash flow based on an inflation factor as well, right? So I'm a big fan of rental real estate for that reason, right? You can raise the rents to keep up with inflation. Replacement cost of a product is much higher. And by the way, if 10 years from now, and it will be, that community is sold out and there are no more, and somebody wants to own one in that community because of the high occupancy rates, the high rental rates, and it's the Best Western, then there's going to be a premium on top of what that replacement value is, right? Because if it's sold
Yes.
out, then it's sold out. Now,
Yeah.
how much
Yeah.
you willing to pay to get that cash flow? Yeah.
Yeah. So it's beautiful. So folks, we're almost out of time here. So what I want to suggest to people is go to ecidevelopment.com and check out all the Mike Cobb properties.
Yeah.
Because I'm telling you, folks, I believe they are the absolute best investments offshore at this point in time. And I believe property investments in the U.S. right now are a fool's errand. I'm just giving you my opinion. And so,
Carter, you're pretty shy. You don't give your opinion very often.
I got to learn to say how I really feel about things.
Yeah, exactly.
Yeah.
Yeah.
So yeah, this has been fantastic, folks. This is opportunity with a capital O. Okay, a capital O opportunity. So Mike, thank you. This is
Thanks,
excellent.
Carter.
Exactly.
Always fun, man. Good to see you.
Yeah. All right, it's great to see you. Thank you very, very much. All right, folks, as I always tell you, let's do this thing. Really, in this case, do it. Do it now. Take care. We'll talk to you next week.